Shares of Royal Caribbean ended the day higher after the cruise line reported better than expected third quarter earnings and raised its full year guidance. I spoke with Royal Caribbean Cruises CEO Jason Liberty on where the optimism about demand is coming from.
First, it's really great to be here, and I am actually on a ship. It's not just behind me. I would say the optimism comes from a lot of different things. I think first and foremost, we have about 130,000 guests sailing with us today. And we have that each and every day, and we have we have millions of interactions with our guests each and every day, whether it's via web, whether it's them booking directly with us, whether it's coming through our wonderful travel agency community. So we're seeing a very healthy consumer, especially our consumer, where the average income is at least average household income is at least $125,000. We're seeing that consumer not only make very strong bookings today, but they're booking 6, 12, 18, 24 months out. So we have that visibility on how they're trading each day, and they're not only are the volumes above what we have expected and what we have been seeing, but they're at better pricing. So you combine that with the incredible onboard spending behavior that we're seeing, that's what kind of fuels that optimism. But it all feeds into our general formula. Moderate yield growth, moderate capacity growth, good cost control leads to margin expansion, high returns, and step changes in our earnings.
And you mentioned pricing as well, and you also mentioned the amount that people are spending on the ships, which you mentioned has been really increasing and has been a pleasant surprise for you guys. What do you see in terms of pricing trends, not just on board, but for the trips themselves going into the next year?
Yeah, so we continue to see elevated pricing, or pricing continuing to increase as we go into next year. And of course, we're also seeing increases in onboard spend. One of the things that we've gotten a lot better at is being able to get our guests to plan their activities and book their activities well in advance of them getting on the ship. We kind of give them a day back of their vacation, and they have a very good understanding of what the broader offering is. And that's one of the things that's also boosting our onboard spend. And they're able to kind of consider that in the total package. And when they compare that total package between ticket and onboard to what they would be paying on land-based, it's still at a pretty significant discount to what they would pay if they were on a land-based vacation.
One of the other interesting things you talked about on the call is, of course, you, like all corporate leaders right now, are seeing some economic headwinds, or at least conflicting signals when it comes to the economy. But you said you see yourself, if I'm reading your comments correctly, as sort of resistant to some of those headwinds. Explain that to me a little bit more. I mean, do you see people, for example, cancel trips when the economy starts to contract a little bit, or do people stick with it and they just, because they booked it already, they just go on the cruise?
Well, I think it's a couple of things. So one of which is, I think there's a lot of macro trends that relate to the entire population or a different set of different markets. Now, we source our guests from all over the world, and so a lot of those macro trends could be relevant, but when we get into those trends that relate to our customers with their saving rates, their current wealth levels, when we look at their saving rates, et cetera, and most of all, their propensity to cruise, which is reaching all-time highs, and you combine that with a value gap to land-based vacation, even if that consumer is a little bit weathered, when they're still going to take a vacation. And of course, we're trying to close that value gap. But with that value gap out there, we think those are additional tailwinds to why we're seeing a continued uplift in demand on both volume and pricing.
And finally, Jason, I did want to ask you about Israel and the effect of the conflict there, which you talked about, of course, in the release and on the call, that it's taking out about 1.5% of the capacity, relatively small effect. You also helped evacuate some of the folks there. So what is the current situation? Are you still helping with some evacuations? And, how do you model out something like this, which is so difficult to predict?
Yeah. Well, I think first, we're pretty kind of late in that European season, so we have very few sailings that were really even left to go into that part of the world. Obviously, we reacted when these kind of horrific acts and situations occurred in Israel, and this conflict kind of continues on. It is only about 1.5% of our business, and I think it's important, a few things. One, we have a very kind of balanced portfolio of markets and destinations, and there's always within this large kind of geopolitical world, there's always going to be some things that do a lot better and some things that do maybe a little bit worse, or some things that we have to turn off. In this case, currently, like the trips out of Haifa, and we build a model to be able to play when it rains, and I think that's really important. For us, when the U.S. called on us, and it was a very easy yes for us to help out, and of course, most importantly, for us to do this pro bono. We felt that was very important. And of course, we're still engaged with the State Department, and we take direction directly from them on when and how we can help get more Americans out of Israel.
And finally, one more quick question as we're talking about international markets here, and that has to do with China, where you guys are ramping up. What do you expect that cadence to look like, considering that it's really been quite a lumpy recovery there?
Yeah, well, we're stepping in with kind of our first toe here. So we'll start operating there in the spring of next year. The Royal Caribbean brand, by far has the strongest awareness and appreciation there in China, and they look for a kind of international experience that's delivered with the China element, and we are masterful at that, as all those guests are really from the China market. So we're stepping into that. Demand looks exceptionally strong, so we're very happy with that. And then as we go through the season, we'll evaluate what our growth expectations will be for 2025 and beyond.
And that was my conversation with Royal Caribbean CEO Jason Liberty.